Wall Street considers inflation data as Nasdaq slips and Dow rises. Today's stock market news introduction. In the ever-volatile world of financial markets, investors are constantly grappling with a myriad of factors that influence their decisions. One of the most significant factors is economic data, which can set the tone for market movements. In recent trading sessions, the stock market exhibited a mixed performance, with the Nasdaq slipping while the Dow Jones Industrial Average, Dow, managed to post gains. This dynamic was largely driven by the careful analysis of inflation data by Wall Street participants. This article delves into the recent stock market trends and the impact of inflation data on the Nasdaq and Dow. The inflation conundrum. Inflation, the rate at which the general level of prices for goods and services rises, is a crucial economic indicator that can greatly influence investor sentiment and market performance. Wall Street closely monitors inflation data as it provides insights into the health of the economy and the potential actions of central banks, particularly the Federal Reserve in the United States. Recent months have seen concerns about rising inflation levels, partially fueled by supply chain disruptions, labor shortages, and pent-up demand as economies recover from the impact of the COVID-19 pandemic. Investors are wary of higher inflation, as it can erode purchasing power and lead to uncertainty in financial markets. Consequently, any new data on inflation is analyzed meticulously by investors seeking clues about the future direction of monetary policy. Nasdaq slips, tech stocks under pressure. The Nasdaq Composite Index is often seen as a representation of the tech-heavy segment of the stock market. Tech companies, especially those that are high-growth and speculative in nature, can be particularly sensitive to changes in interest rates and inflation expectations. When inflation concerns rise, the Federal Reserve might consider tightening its monetary policy by raising interest rates, which can impact the valuation of high-growth tech stocks. In this context, the Nasdaq slipping can be attributed to investors' cautious approach amid uncertainty surrounding the path of inflation and interest rates. The sell-off in tech stocks reflects the market's anticipation of potential headwinds for companies whose valuations are based on future earnings expectations rather than current profits. *** Dow rises. Value stocks. Find favor ***. On the other hand, the Dow Jones Industrial Average, which comprises a mix of traditional and established companies from various sectors, including industrials, finance, and consumer goods, managed to post gains during this period. These companies are often referred to as value stocks because they are considered to be trading at a lower valuation compared to their earnings and fundamental metrics. Value stocks are generally less sensitive to changes in interest rates and inflation. As Wall Street weighs inflation data, value stocks become more attractive to investors seeking stability and dividends. During periods of economic uncertainty, investors tend to favor companies with a proven track record of generating profits and returning value to shareholders. Navigating uncertainty. The recent market dynamics highlight the delicate balance that investors must maintain in their portfolios. Diversification is a key strategy for mitigating risks associated with volatile market conditions. By holding a mix of assets, including growth stocks, value stocks, bonds, and even alternative investments, investors can position themselves to weather various market scenarios. In times of inflationary pressure, considering sectors that historically perform well, such as energy, materials, and certain consumer goods, can provide a hedge against rising prices. Simultaneously, maintaining exposure to technology and innovation can capture potential growth opportunities as economies adapt to new challenges. Conclusion. The stock market's response to inflation data serves as a reminder of the intricate interplay between economic indicators and market behavior. While the Nasdaq slips due to concerns over inflation's impact on tech stocks, the Dow's rise signifies investors' gravitation towards more stable, value-oriented investments. In an environment of uncertainty, prudent portfolio diversification and a keen understanding of economic trends are invaluable tools for investors aiming to navigate the ever-evolving landscape of financial markets. As Wall Street continues to weigh inflation data, Market participants will remain attuned to any shifts in economic indicators that could shape the trajectory of their investment decisions.